All right.
It was your best YouTube introduction.
Welcome everybody. So good to have you with us in the room and watching the recording later. This is all for you, so I hope you appreciate all the cameras and the angles and everything. But anyway, we've just been having another amazing evening, hanging out, having some chicken and currently some dessert, finishing that up. But so stoked to have us all together again. I know not all, because some of you can't be with us, but hopefully you get a stack of value from this recording. So tonight, guys, we have version 2 already in all of your hands. Who's excited about version 2? There we go. Well, it's week 1 of having version 2. So already had our first Zoom with it on Tuesday night. Got you guys feedback, and within 48 hours, I think the updates you guys suggested were already in. So the next one that we thought of, might as well just throw it out now. I've already had someone say good idea, was the idea of making the default settings on the pivots and or possibly POC 50% opacity, so that it's a little less. So by default, it's that, so that you could turn it up if you want, because if you're like me, I like to turn them down, and there's 40 of them to turn down. So every single update, which is why I haven't bothered changing my colors in the process of this.
Oh, sorry.
It's okay, we're grateful. But I don't know if anyone thinks that's a good idea. We'll just go, okay, well, there you go.
He doesn't like my color choice. So
We weren't talking about colors now. Shots fired. We're just talking about the opacity. But okay, well, if you voted, there you go. The tribe has spoken. Okay. But okay, we might put that up. Here it comes. It's all right. But we are here, and tonight we have got some more training. But before we do that, I've got 3 books left from Black Bull. So I know a bunch of you were here last time and a bunch of you weren't, but I do know that Lisa's traveled definitely the furthest, all the way from South Africa. So you definitely get a book. And I'm going to say Adam and Richard are probably the only 2 that weren't here last time as well that didn't get a book. So there you go. That works out pretty dang well. I mean, at least we'll keep saying something. But otherwise, yeah, we've obviously got some product from Black Bull. So we'll get some more. They just threw a bagger at us with all that stuff. We went to go meet them, which was fun. So we'll find some more of that stuff hopefully soon. But otherwise, without taking any much more time, let's rip in. So guys, put your hands together for Dad as he comes up to take us away for the rest of the evening.
So firstly, thanks for all the suggestions. People just keep giving me good ideas. So there will be an update to the update to the update. But like, who said to me now about the trend zones? We talk about the trend zone, the MACD. And it was brilliant. But Marcus, that was a great idea, because like the tables now, you can move the MACD trend zone and the main trend zone table can be moved anywhere in the charts. And they really are the wrong way around, because you got the main indicator on top and the MACD on the bottom, but then they're the wrong way around. I mean, like, I never thought of that. So they were clever enough. Now you can move them. They put the main trend zone on top and the MACD trend zone underneath. Isn't that a better idea?
Yeah.
So the default, by the time you get it, you can open up the next one. The main trend zone will be on top. I'll just swap the defaults around. But they've been really great ideas. Like Aaron mentioned too, just with and I'm working on it. I've spent 8 hours on it over the weekend. It looks horrible the way the pivots over the time frame are joined together with lines. So it looks like a spider's web. So I've been trying to work out how to get rid of that line that connects them. So it took me 8 hours, but I've scaled it back to the 1 day. I've got the 1 day separated. So now I've got to see if I can do it on the weekly and then the monthly and the quarterly. And then gets very nerdy now. But with the PineScript language, there are a lot of limitations and you get funny quirks. Like I also did over the weekend, 1 button to change the opacity. So you can just press, you want 50% or full, all goes. But I do that, when I do programming, I take the bit out and put it in a separate thing. But the trouble is, PineScript counts that as extra plots and you're limited, it's nerdy. You can only have 64 plots an indicator, and that ends up chewing up more. So I'm thinking, because we have already got 3 indicators in the strategy, so I'll need to talk to Tai. We haven't spoken about this yet. This has been my thinking in the last 2 days. Most people would have a paid subscription now to TradingView to get the 3. We could make the pivots like a separate little indicator, and then it'd be easy to control the opacity. So I don't know what people think of that, or just keep it included. So I'm always busy with something, as my wife will tell you. I tried to tell her I'm almost finished. She said, I don't think so. Cool, so let's fire away. So I want to talk mainly about the counter trend signal, because that's new in version 2. So I want to firstly say it's always safer to trade with trend. So I've put it there as like an optional extra. Cool, so I've made a few notes too, so I just don't ramble on too much. So just the first thing, so the trend is always your friend. So counter trend signals have a high risk. But there are times when it is kind of safer to take a counter trend. And I could feel the frustration of our communities, like price goes up, you miss the width trend, it comes down and it drops 100 pips. And the rules are, it's a counter trend, so we don't take it. So that's why I've tried to develop this counter trend signal that Ty will tell you. It's got about 120 lines of code in, and it looks at about 5 or 6 different variables to make the highest probability chance of a counter trend signal making money for us. But if you took every counter trend signal, you are going to make a lot of losses. I mean, the thing is, if you take counter trend signals, you will make some losses, but you'll end up making more pips in the long run, because a lot of the times it's really accurate and they do run for quite a long time. So me, I'm like, I hate losses. I mean, everyone's got their fear. Some leaving money on the table, something wrong. So I'm like really sure about when I do a counter trend signal, the rules I've made is how I trade, what I look for, that I want to talk about tonight. So I'm saying, because one appears, don't just take it. Rather see it as an opportunity than as like a command. So, okay, a counter trend signal's popped up. It's plotted one. Should I take it or not? It's an opportunity, but it's not that you have to. So remember, when you are taking a counter trend, you are between the EMAs. So like now, the trend zone light, and that was someone's idea to make it bigger. So that is now one size bigger, a little bit more visible. So it's an opportunity to make some more pips. Trend zone light will be orange because you are between. That's why you can see when you're trading with trend, can you see how beautiful? There's only like one kind of bit of a low test bar there, but generally when you're trading with trend, boom, it looks sweet. But counter trend, can you see how ugly that looks? I mean, there's a big difference because you got other EMAs on multiple time frames that it's bouncing off. It's trying to work its way down, and it's bouncing off EMAs on multiple time frames. That's why it looks ugly. Like this trade over here, you're above every single EMA on every time frame. So there was no opposition. That's why trading with trend is great. Counter trend is always messy. You're going to get pullbacks, and that's the hard thing about should I stay, should I go? Because every pullback, should I get out there? Should I get out there? Oops, okay, should have got out there. Should have got out there, there. How many times you look back and you pulled out multiple times, or you pulled out in the beginning and then it goes down like 100 pips. You're thinking, oh, I should have stayed in. I mean, that's trading. It just comes with experience. So, but generally, when you see a counter trend signal, the way I've done the programming is I've like got about 6 factors together that when you get one, there should always be a nice little boost, boom, and it jumps up. And the whole point was to try and set the program that you can at least get yourself in a break-even position, or like 2 or 3 pips, and so it's quite safe. So very often when these conditions are right, that I'm going to mention, and I get a counter trend signal, I'm quite confident. I just wait, and I wait till it's 6 or 7 pips up, then I get into 2 pips positive. Now I do get stopped out quite a few times, but generally I find that because you get a little boost with that signal, you can get yourself into a risk-free position. All right, but there are certain times I'll explain more to give it some more sense. So what lessons reduces the risks for counter trend signals? If everyone is a risk, what reduces the risk? So I've got 10 points here, and I'll post these in our chat. All right, so first rule. Now, some of the rules are similar. So we're going to look, here's a good example. This was Saturday morning. Let me just line up, where are we here? What time was this one? That was at 6:54. Oops, sorry. If it was my computer, I'd be a lot faster. All right, so here we go. We get a counter trend signal. I mean, there were pips that they were actually about, I mean, there were probably 20 pips down to there from that signal. But what is the first problem you see with taking that signal? The first rule is like the 1 minute needs to be aligned. So the 1 minute's nicely aligned. Can you see the trend zone in the main indicator is right? The MACD is right. We got a signal. But what's the main problem here? The 3 minutes. I mean, this is like, that's why we've changed this to what I've been talking with the guys on the table there. Which way is the 3 minute 21 heading? And when that's heading up, what's price going to do? It's going to go back up and test it. And that's why I was talking about that. I posted that one trade just after the talk. Oh, sorry if I'm boring the guys I was sitting with. A trade popped up on the 3 minute on the NAS. So I think originally there was a buy signal, but the 21 was pointing down. So I knew it was going to pull back. But I waited. So I waited for it to do its loop. And then I waited. And then on one candle, I think I posted that, there was both the main bar and the oscillator went bright green, plus there was a boost star, little explosion. So I knew that was like a safe trade. So the 21, I cannot tell you how much I rely on 3 times higher time frame, this SMA 21. So, I mean, you could have taken a risk. You would have probably got to break even there before a pullback. You could have, there would have been maybe 15 pips if you'd gone through that pullback, could have been 20. But that would have been risky for me because of this. This thing is still heading up. That is still blue. Highly likely. I mean, this is such a magnet. Price always pulls back and tests. So that would have carried some risk, that first one. So number one, obviously look at the current time zone, look at 3 times higher, and we can see SMA was up. I mean, I would have still been tempted because this oscillator is so accurate on the 3 minute. That would have been tempting, but that now I realize, man, more and more I realize this white line is crucial to trading 3 times higher. So then the second rule is look at 3 times higher. And that's what made this initial counter trend trade risky, because we were still this was still showing up. All right, then the next one is that with counter trend, I said sometimes price does race up or down depending, what trend you're in. The closer you are to the 55, the less the risk. So in this case, can you see that the signal came right very close to the 55? So that lessens the risk. So in terms of this trade, that would have been a positive. Sometimes if that signal had come when price had rocketed far away, it becomes risky. And the reason is because very often you want your stop loss close to the 55. Because what happens, all these EMAs that I've chosen for our indicator are ones, because there are multiple. I mean, I can rattle them off. There are multiple fib EMAs, but over time, certain EMAs respect price more than others. And so the 55 is a real key. It's a fib number. And when price breaks through, very often it'll come back and retest. And so if price is broken, you get your signal far away. Let's just say that signal manifested way down here. You're miles away from the 55. And we can see with this signal, price did come and did retest that 55 area before it made its way down. And so the closer you are to the 55, when you get the signal, the safer the trade is. So this was pretty good. This is your signal, you're pretty close. So that wouldn't have been bad for that one. All right, your stop loss. So basically, this is not going to generate stop loss signals and take profits because it's too different each one. So generally, you will often need a bigger stop loss for a counter trend trade, because it's less predictable in terms of, remember, it's hitting other EMAs, so it's likely to bounce back. And so you need a bit of a safer stop loss. So I can't tell you where, but definitely you probably want it above, the 55. And so then you've got to figure out your risk reward ratio. So this candle may have that's where it closed, but it may have opened higher up. So if you put your stop loss back into the trend zone, you would need a 16 pip stop loss there. You wouldn't have got a 2-to-1 on that trade. You would only got a 1-to-1, 1.5-to-1, which is still acceptable just. You would have just got, that's the minimum you should go for in a trade is 1.5-to-1. Don't go for 1-to-1s. I've tried that and it works a lot of the time, but then you get bitten after a while. So you may not have worked it out that quickly, but you can quickly, that's how I work it out quickly. If that trade opens, okay, whoops, where am I looking? I need about a 16 pip stop loss, etc. So your stop loss, it's generally got to be above the 55 for a buy and below for a sell. Because if price pulls back, it's going to pull back potentially into the trend zone or back to the 55. All right, then number 4. So what about your stop loss? So what I tend to do most often, as I said, once a trade, you can see once you got that signal, that trade bounced down pretty quickly. You probably could have got into a break-even position quite quickly, but then obviously this one would have pulled back and stopped you. So it depends. Each counter trade is different. This one was very, I'd call it very, what's the word? Erratic, jagged. There's a word for it. Okay, let's leave the word. English was my worst subject at school. Indecisive. I mean, some counter trends are beautiful. Some counter trends rocket up like that. You know, some don't even have a pullback. And then I just use a trailing stop loss. If it looks like this, that's what I like about Heiken Nature candles. I don't know anyone else does this. I just move my stop loss at the base of each Heiken Nature candle. And very often you can chase it all the way up until you get your doji. So I tend to do that depending on, on conditions. But as I say, the point I'm trying to make is I like to get into a break-even position soon. And then often I get stopped out for 2 or 3 pips. So what? It's not a loss. So depending on the conditions. All right. So now this is the real key. And I'm trying to see, are all your pivots on, Ty? They disappear. Where are they? Oh, you've already dimmed them out 50%. Is that what life looks like with opacity at 50? No, it's fine. Yeah. Okay, so a key is for counter trend trades is a rejection of a line. So have you heard that concept? If price bounces off a line, it makes a counter trend trade far safer. So we're chatting with the guys, I think it was Aaron. So especially with things that can bounce off a number of things. So, I mean, if there was a demand or supply zone, for example, if this counter trend trade came and there was like a red band across there, the price had rejected, and there probably was, I mean, I delete mine after a while, but there would have been right up there, would have been a supply zone up there, a red band. So you are quite far away, but it still did reject. But the closer the signal is to rejecting a line, the higher the probability is that trade's going to move. So I remember I sent you the picture, this you won't remember, like months ago. When those pivot lines appear, I call it a cluster. Like once price came down, yeah, this is a real point with trading. When you get like a daily, monthly, quarterly, weekly, and they're all very close together, and price hits that, it's going to bounce. It's like if you try to bounce a tennis ball off sand, it's not going to bounce at all. You bounce it off grass, it's going to bounce a little bit. You bounce it off concrete, it's going to bounce really high. And so that's how these pivots work. When they come together in groups, like I got quite a big trade, I sent you the pictures. Price came down, it came down with trend, and there was like a quarterly and a weekly and a daily very close together, and price hit it, and there was some dojis. When I saw that, I just pressed buy immediately, and I put my stop loss below the lowest wick. And I mean, price just rocketed. I sent you a picture, and I think I circled. Price just rocketed the other way. So when price rejects a line, there's a strong possibility it's going to bounce the other way. And so pivots, that's why I've got pivots in the strategy. That's just my own style. When they group together, look for clusters. That's why I know it's noisy, that's why I like to keep them all on in my 1 minute, just to have a good idea. And if I'm trading off the 3 minute, I'll turn them all on the 3 minute. So if they bounce off a cluster, they're going to go, but even off a weekly or a monthly or a quarterly, those are big potential reversal points. And so on this particular trade, there's no particular level here. You have got, they would be all on here, Ty. I think I remember anyway, I saw that. I think they're all turned on. Yep, all ticked. So that does increase the risk of it not moving quickly. So that's probably a reason why I suppose you call that a rangy move. I mean, it did move down quite a bit, but it didn't bounce off something really strong and work its way down. I mean, if there was, say, a cluster of pivots and you got your counter trend, I haven't been drinking, I assure you. Well, not since breakfast anyway. No, just kidding. If there was a cluster of pivots there, boom, it would have shot up. You can see here as a classic, there's a rejection of a line. You've rejected a pivot there, a daily pivot. Yeah, and there, okay, you got the pattern there. Yep, so when it rejects a line, can you see it often makes a much cleaner trade. You rejected a line, boom, and up. So always look for counter trend if there is lines you can reject. So it could be a demand or supply zone, those bands that go across. Definitely Camarilla pivots. That's why I've got them in the strategy. And then also look for, I made a list here, big round numbers. So that often those are very safe counter trends. That's why on my charts, you'll see I always have big round numbers. Now I'm a bit, how does Captain put it? CDO. Yeah. So I mean, I've got in faint, I've got every number ending in, 38.2 and 61.8 in faint dotted lines, because if price rejects those and there's a counter trend, those are also big for reversals. But look, it is a lot. I mean, you can't have everything. I don't mind the noise too much. So big round numbers especially, I trade mainly the Dow and the NAS. Those are massive for rejection of big round numbers. So if you get a counter trend signal and it's bounced off a big round number, price is likely to move. Also POC. So if price has rejected the POC and there's a counter trend signal, that's very strong for, I love my new POC. It's really accurate. So if it bounces off the POC, so remember I said it at the live trading, the POC is where like most trading is concentrated. If you're above it and you're moving down, it means you're trading into buyers. And if you're below it, trading up, you're trading into sellers. There's sellers waiting to move it down again. That's how I understand the point of control. So if price has been in a sell and it hits the POC and you get a counter trend signal, it's rejected a line and it's quite a strong level, then it makes it far safer to take the trade. All right, so rejection of a key level. And then you mentioned that Heikin Ashi pattern of bearish doji bullish or bullish doji bearish is always great. So, if you look over here, now this is quite far away, but can you see?
On that left-hand one. That left-hand bottom of the trend line.
Where we're looking? Over there?
No, left, further, the bottom.
Oh yeah, there. That's a classic. Yep, there we go. But you can see this one here, up at the top. When you get a bullish, doji, bearish, and you've got seller momentum, there's those trades you can get in often into break-even position. But that's a good sign the move has ended. So I'm always looking, and now especially on higher time frames. So this is what I look for too. When I'm doing a counter trend, generally it's not too far from the bend, you know what I mean? So if you're doing a counter trend buy, it won't be too far from where it's bottomed out. I'm looking at the 3 minute, at the 8 minute, and if there's that pattern, you know what I'm saying about that pattern, the doji, bullish, bearish, those patterns on Heikin Ashi, that's what I like. That's a good part of, so especially on high time frames. As I said, Heikin Ashi candles on high time frames, one of their strengths is predicting a change in trend. So although this signal may have come, way after the turn, that's only maybe one candle away from the 8. So I haven't even looked at the 8 here. Almost, look at that. That came within, no, it is. No, there's this tiny wick there, but that will almost qualify. But there's a good example. That's an 8 minute signal, and you've got a bearish, doji, and bullish at the top of that move. So that would be a strong chance that move's going to reverse and come down, which it did. So you don't have to have that for reversal, but I always look at that. So when I see that on a high time frame, I'm looking at the 8 minute, the 3 minute, I'm on the 1, and I see that pattern, and I get a counter trend signal. That makes it a far safer signal. Is this all making sense? Cool. I'm getting through quite quickly here. I feel like I did all my teaching talking around the table tonight. That's cool. Okay, then also you can also reject a trend line. So I'll mention trend lines in two possibilities. So these trend lines in version 2 extend way further, and they are quite strong for support and resistance. So I'll just make up one here. Let's just say let's say we got a counter trend signal over there. can you see it's rejected this trend line? That only would have got plotted on that first candle, but it came down and retested that level that was plotted, from there to there. So if it's rejected a trend line and you get a counter trend signal, there's a high that makes it a much safer trade. Because it's rejected, it's also rejecting a line. All right, then let's get to this next one. That was a better signal. So if we look at this one, all right, so this one was at what time? At 7:30. So now we get another counter trend signal. Can you see this one is way stronger for multiple reasons? Can we see, firstly, we've broken a trend line. So even if there wasn't a signal there, breaking a trend line most often, rejecting a trend line or breaking a trend line most often produces a move of some pips. So here we can see that price tested the trend line there, tested it again, 3 times, tested it there, tested it there, tested it there, and then finally you get this wonderful Heikin Nashi bearish candle with a counter trend signal on top, and price falls. So that's why I've changed the trend lines in version 2. Because I like them extending further and price testing them more. So if you've got questions, just interrupt me.
Just a lot of good things there. Separation and the
Yeah.
zone.
So if we score this one, okay, so can you see both zones, the MACD? It makes so much sense. Thanks for that swapping. Those are going to swap around, because it makes so much sense. You will use less brain energy interpreting the charts from next time. But now you can swap it yourself now. All right, so what else is good? We can see, if you look at the 3-minute, can you see prices going one way there? On the 3-minute time, can you see there's wonderful separation? SMA, can you see far healthier? It's now pointing down, it's rounded going down. We can see the MACD on that signal is also very, very bearish. So both time frames, there's great separation. Even on the 8-minute, it's just crossing over. But remember, we've had this pattern on top, which shows that trend is definitely reversing. That's a good indication the trend's reversing. And plus, if we look at the MACD on the 8-minute on that signal, that's great. I mean, a crossover above 0 shows that you're at the start of a good move down. So the fact...
Explain that more. Crossover, you're talking about the trend.
Sorry, the MACD, the crossover.
Yeah, turning into a red trend zone.
Yeah, so on the MACD. And it's like well above 0. So sells become more riskier when you are, like this one was below 0. It's more riskier, but on high time frames, you're well above 0. It means that price is still going to move a long way down. So I bet if you look at just the 3-minute rule, the 3 minutes looking very good. Plus, you've also got the oscillator is normally this middle bar is very accurate. That's showing strong bearish momentum.
So if I'm looking at just before that second counter trend signal,
Yes.
looking at MACD, you've got buyers trying to pump it up, and then sellers trying to...
You mean down over here?
Yeah.
Yeah.
Sellers trying to... little bit of sellers pushing it down, and then a little bit of buyers pushing up. For me, if I look at that, I can see 2 things. One, the buyers tried to push it up, didn't go anywhere.
Yeah.
And they tried again, and they didn't win. But I also see sellers trying to push it down and not having much momentum. That's where I get stuck, because I'm like, well, is it going up or is it going down? Because both of them are dwindling.
Yeah, that's why you got to look at high time frames. Remember, high time frames bully low time frames. Yeah. So yeah, it looks like a lot. If I was just looking, I'm thinking this is quite risky because like it's gone flat. Yeah, it's indecisive. If you look at the 8-minute, that's absolutely clear. You're right. That is strong. Like at that point there, that's like strong bearish momentum and that MACD. And also with the 3-minute, that signal there. Yeah. So, yeah, just look to high time frames. And that's the weakness of the 1 minute is, it's more volatile. You get false signals. So this was a great counter trend. To have that break a trend line after testing it multiple times means price is going to drop. All right, then also, yeah, look, I've just got that another point.
So where would you enter and put your stop loss on that one?
Yeah, that one, I mean, already a price would have dropped quite a bit below. You're quite far above. I would have just stuck it. What I do, you know what often works? I can actually, for that, I just stick them at the top of the candle as a rule, and I hardly ever get stopped out. That's what I like with Hakanashi. My stop loss, I just very often, these, especially not, if I'm entering off a buy and sell signal, I follow the rule. But if I'm entering a trade that's already running and it's a counter trend, if you just go and back test that, you will see, like look on the 3 minute, if you put your stop loss there, sometimes it will be bigger than you need, but it just takes less brain power. I just do it automatically. And then once the trade starts running, then I start manually moving it. But so I don't have to worry. I'm going to click sell. I just bang my stop loss there. And then I'm either going to chase it down or I'm going to set a clear target.
I think that was a signal I was saying about that I missed. I saw it 2 minutes after I went in, and I printed that second counter trend. I got it and put my stop loss on top of the candle and followed it down. I think that was worth 10 pips or something. But that was the one I was saying that I looked away for 2 minutes after.
Yeah, you missed it.
Yeah. So the 3 minute had changed, and that's what
I mean, I chatted with Tao. We thought I could change the program so you only get one per move, but very often you get two or maybe three, and they all have got pips in. So yeah, they're reconfirming. So if you're in, there's 5 or 6 conditions that, so the fact that's mean there you're going to move down. So that candle may have opened way up here, but I mean, look, 10 pips is 10 pips. You know, every win's got to be celebrated.
And naturally, the 233. Was pretty good target, right?
Yeah. So in basically I've noticed that once you get separation, that's why I've chose these EMAs and I've especially put this color band between. Once there's separation, you know, price tends to move as long as they keep separated. So that's that's number 8 or 9. You look for separation. So this was not so clear on the 1 minute. It had just separated, so you hardly would have seen that if you on that. It's
really nice though.
Yeah.
All of those, even though it's a little rangy just before that first signal.
Yeah.
It's just a bunch of basically sideways action, but the bodies are all closing beneath the moving average.
Yeah.
Beneath the trend zone.
Good observation. Like all these candles here.
All of them. They're trying to wick into the zone, but none of them are closing inside the zone.
I mean, that's why the zones are there, was price. When price gets in this little zone, it's likely to push down. All right, so look for separation. So there was great separation there, not so much. I mean, I could add it. I've done it, but I've took it off. You know, I used to have a circle on the crossover, but it just less is more. Just look to higher time frames. Look at that separation on that signal there. Great separation on the MACD there and over there. And over there. And so whenever there's separation, boom, price is going to move, whatever, you know, bullish if it's red, bearish, sorry. Making sense? Yes. Okay, so then number 9 of 10, we've mentioned this already. Look, always SMA, that's like non-negotiable for me. 21. The 21 SMA. So yeah, it's already rounding, heading down. So remember this, on the 3, there's like so much information. It's probably been going down for 3 candles. That's the last 9 minutes have said downtrend. That's how I would interpret that. So there's 3 candles of down, of 3-minute candles. That's 9 minutes of information is saying it's moving down. So obviously the 1 minute's down, but I always look to higher time frames. I mean, if you're looking at this one, it is crossed over. It's below the POC. Are we below? Yep. So that's a good sign that, you know, price is closed below. That's definitely headed down. So this is a good example. I mean, how long you stayed in that trade for? I mean, if you had the nerve, Thai is very good. I don't do well in those kinds of trades. Who takes their chances through chop? That's what. No, for me, I would have probably just taken, if this candle opened, that candle probably would have opened somewhere over there. I would have been happy with 34 pips. I would have taken that 233 as my target and walked away happily. Now the 3-minute got a counter trend, and that of course dropped a whole bomb on that candle. That could have kept you in, but look, if you would say that candle opened there, you may not all think like me. I mean, that would have pulled back. You would only been 5. You would have been sweating by then, flip. So if you had the choice of sweating, I'm now back to 5 pips, or taking your 35 or whatever it was, yeah, take the money.
James the answer.
Yeah. So I mean, look, higher time frames, you could have, this is a completely valid trade here. So you could have gone on the 3-minute counter trend. You need a bigger stop loss. And I mean, there would have been a lot of pips on that one. And that candle would have opened up there somewhere.
The 8-minute 21 is going the wrong direction.
Yeah, just turning. It wasn't perfect, but there were reasons. You got to look at other things. You got that pattern there. That means it's definitely headed down. This trend boost, those are very strong. Did that come? No, yeah, just after. So look, and there you had a trend burst there, and it shifted down, and you got another counter trend saying keep the faith. But the fact is, look, if you can handle pullbacks, that band heading down, and you can see the 55 and the 3-minute is staying bright, which is a strong. That's part of the secret sauce of this indicator, is that band. Yeah, and that I was pre-walking my dog, and God gave me a revelation how to make that change color. So that's come from heaven, I believe, if you're spiritual or not, to help us make money. So I mean, you could have held your nerve through that 3-minute.
Has ever seen anything like it?
No one will work out how I did that, I can guarantee you, unless they get a revelation. But so that is so I mean, that is valid. As I say, you're turning over there, but what I would say is that MACD there is pretty strong. You haven't gone opaque on the histogram. And remember, you need, with the higher the time frame, the more accurate the signals are. So I mean, there was 50 pips if you could hold your nerve. And there were reasons you could have stayed in, especially with that. It only lost its color after it reversed. So the 21. And then the last one, I want Ty to do a whole training on this, is look for classic price action structure. So before you take a trade, so let's have a look here. We got a classic, can you see the head and shoulders here? And it's broken. That trend line, it's broken.
Money entry, right?
There's a money entry right there. So do you know the head and shoulders? Shoulder, head, shoulder, and it's now broken the shoulder. That would make that a very low risk, high probability counter trend signal. So it's one of my favorite patterns, the head and shoulders. Also double top, some people call it an M, or triple top. So those are important to look at those. Those make price action structures, make counter trend trades far easier. So those are the main 3 I look at. I know the other ones. So triple top, double top, head and shoulders, and of course the reverse of those W's.
Real interesting. That's a 1 minute. But the higher time frame you go, I can almost guarantee that'll look like a doji in a higher time frame. That whole section at the top of a big move.
I mean, you can see it playing out in the 3-minute too. So there's no trend line here, but let's just draw no, yours, that's array. Have you not got one for normal trend lines here?
You just got to click the menu. That's just one I use the most.
I've got to press escape to get my screen back. So we didn't, a trend line wasn't generated, but if we look at how that played out,
So the magnet's going to drive you.
oh my gosh, what have you done here?
I use the magnets with the ray, so my second point on my train line is exactly on the wick.
Just please pray for Ty.
Then I turn the magnet off, and then I draw a standard.
Okay.
Magnet, but I know that it's the exact 2 points.
Okay, but you can see this is a classic pattern. Head and shoulders came down, and what did it reject? It rejected a pivot. Bounced off, that went up, came back, and that first one, have I got in the right place? Yes. So you got a counter trend baking. It's just basically the same on the 1 minute. So look for price action. Sometimes I take trades without signals, but now I've got that, it makes it easier. If you can see these clear patterns are plotting. See, where's your delete? You haven't got a delete one, you haven't got a bin there.
I just push the delete button.
Oh,
Fingers fingers on the
We're
trigger.
all learning. I mean, I do that. I'm just being a bit sarcastic here. Okay, so I think those are my 10 points. There's also the R. They don't plot often, but R's generally shoot up and shoot down very quickly. So there you want a clear target. I'm trying to look back for one on the 1 minute. Yeah. I know what I've done. There we go. I mean, that's very counter trend. So you would have got some pips there. And I've actually made that one size bigger. So now it plots above the rocket. When you get the update to the update, there's a look at now. There's money. Why can you tell me why that trend is good? Why that trade is good? Ty,
Pattern.
look at that pattern. You got a bearish doji, and the first bullish. Sometimes the first bullish
And a rocket.
and the rocket is the real key. That means that's going to rocket up.
And the triangle, early triangle.
And you've rejected this 15-minute trend zone. That is massive.
1 a.m. in the morning.
Yeah, where were we?
Where are we sleeping?
Yeah, I was there.
Stupid o'clock that is.
That's the 1 minute. So, I mean, there were a lot of pips there. Anyway, well, they would have been nice. So look for those, the rockets and trend bursts. I'm trying to see there's another. Yeah, I remember buy signals that are bright generally. But I mean, I've done this now to make more opportunities. And also remember when these little, I call them pullback, I've changed the name, these pullback reverse, pullback resistance and support. When price closed above, it tends to move. Here's a good example, especially when you see like one of these little lines form, and then you get a nice, there's like a full colored bullish candle. And can you see the oscillator is bright? That's definitely going to move. There's always pips. I mean, it's risky, but I did a whole talk on, re-entering trades, but I always keep a lookout for those. And like here, look, okay, this was really counter trend, but high risk. But when you see price rejecting the little pullback resistance line and you get a diamond, okay, those are risky. I wouldn't always do those. But, there are ways when you start getting experience that you can pick up a lot of pips with these little things. Like look out for the rockets and the boosts. Right. I don't know if I need any other questions like version. I don't know if I should say anything else about version 2, everything else. I covered most the other night. I'm trying to think if I just look on here quickly.
We just slightly reiterate the rules. I found that.
Yeah, the rules. So now we've cut the rules down to 5 from 10 to make it far simpler. All right. So instead of TOS, we've got TES.
There were 4 rules with 10 points. Now it's still 4 rules with 5 points.
Yeah, 4 rules with 5 points. So we've kept the same acronym, all changed from TOS to TES.
You can get 4 points without following the 3 minute. The 3 minutes wrong, it takes out 2 of them, and there's only 3 points.
Yeah, probably. That makes it a much higher risk.
3 minute 21 and then 3 minute 10 turns out alignment, which means that you can't really break the 3 minute.
But I would give myself one. Let's say, for example, there was a signal. Let's look at that one. I think that one was a good example from, let's look at that buy over here. So let's analyze that signal. What time was that? 6:13. I was making my coffee then. I was so cross. Came back. I haven't been sitting. I slept until 6 o'clock. I mean, I get up early normally, but it's been holidays and I'm trying to be like a bit more sociable with my wife too. Like, okay, that was 6:13.
I left it.
Why? No, I'm just kidding.
I think because the
Yeah, no.
21 is down.
Just get them lined
Yeah.
up and we'll see.
Okay, but I'll tell you why this was a good trade. Well, let's go to the point. The fact is that's bright green. Okay, you need your sunglasses on your computer for that one.
Yeah, look, I'll change my colours.
Yeah. So when you see bright green, that means it's a far higher, especially when you trade everything. Remember, everything applies with trend. There are more bells and whistles, but remember, with trend, they are very effective. So counter trend, high risk. So you clearly with trend here. This would have been bright green, our trend zone alignment light. So this one, it was hard. I mean, it's all pretty covered up there. was just bottoming out there. So this one, but here we weren't aligned. So I would have given myself, that was only like half a point out of 2 probably, because you can see we are not aligned on the 3 minute, but the 13 is already green and we are trending up. So maybe they would have been worth 1 point, but the fact is that's bright green and you're in an uptrend means a high probability. And also, remember Ty pointed out, we rejected a line pretty close, that pivot. So then the angle of the SMA, we look at 3 times higher, that's definitely an uptrend. It's not going, down. So we've got a point for that. Then space, yeah, clear space. That's beautiful. I mean, there's no pivots. Yeah, I mean, what would have been, there would have been a zone here. You would have been trading into a zone. And that's why, can you see that lightning bolt means that price closed above. There would have been, I can tell you now, from the program, would have plotted a band, a red resistance band over there.
Further back, I think there was a bigger candle just slightly behind there.
But you were trading into a band, but the fact that you've got a bright green and you've got a boost, that means it's giving extra momentum. Made it a hype. And look, by the time, I wanted to say that too, when you look here, especially when you get them on both time frames, so you would have been, a candle, you would have been 3 candles in, they would have given you courage. You got a full color candle with a boost.
Some bright green on 3 minutes too.
Yeah, so I mean, that was so you would have got 1 for space, and for the signal, definitely, you would have definitely got, because you've already got your diamond over there, plus that last trend reversed quite a lot of candles back. So that would have been a 4, I would have given myself 4 out of, 3.75 out of 5. But maybe the balance of probabilities, having that bright signal means it's going to move. So do you understand those points then? TAS, trend zone alignment, you look at a high time frame. A is for the angle of 3 time frames higher. Has there been another signal? Now remember, that includes rockets, boosts, buyer seller momentum, and your triangle in the oscillator being up or down. Generally just one other one. That's why, I mean, there's a lot of bells and whistles, but I'm insecure when I trade. I love, as you've probably picked up on what I've done here, I want everything screaming at me, go.
What does a lightning bolt mean again?
A lightning bolt means you've broken, in this case, a resistance zone. So there would have been a red band stretching.
Like a lightning bolt going
Yeah. And so as soon as price breaks through and closes above, it gives you a little bolt to say price now is closed above and it's got a high probability of going higher.
Right.
Well, in that case, I guess 2 candles, it gave a little retest, so it broke,
Yeah.
retested, and then
And in fact, on this candle here, you would have got a green star, would have hopped across. There would have been a green star for the previous high, and at the same time, a green star would have plotted on that candle. You would have seen a green star going up, following you up.
What's the difference between a rocket and a booster? Oh, they're doing the same thing.
What make it?
the moment you realize you're having this conversation,
Yeah. Well,
who would have thought?
it's very simple, really. And I will give you, so I worked out on probabilities. So a rocket, a booster, a rocket is a booster that plots at the same time as a momentum diamond. So I noticed that when I was experimenting with a booster, whenever it plotted with a diamond, price raced far more than it would normally do. So I mean, although they're using completely different data to plot, when those two combine, you get a rocket, yeah, because price is going to rocket up. I mean, it took me I can tell you, that took me I was trying to work out the coding, because you now got multiple possibilities. If you get this and that happens, and you got to write the language for it, my brain was getting smoked. But eventually I worked it out. So when you see a rocket, it means there's a boost with buy momentum or boost with seller momentum. And when those happen on the same candle, so that's why if you see a rocket, you won't see a diamond, and you won't see a boost, because the rocket takes a place Is it making sense? I'm thinking. Yeah, yeah.
I was finding it frustrating because I couldn't tell if there was a diamond underneath the rocket. Where's the diamond come from?
Sorry, I should have said that. I'm trying to like make it less cluttered, but putting something that's stronger.
But now
Yeah.
that clarifies it nicely.
Yeah. Was before you'd see a diamond and a boost, and it's like more noise. I thought rocket. I don't know. Maybe that's how I just think. I mean, not I say people think differently to me, but anyway,
Come back down to where we were before. Come back down again.
yeah.
Further down. Keep going. Alright, right there, so you see a rocket, then go very far, and then there's a booster. So,
Yeah.
With the R with the rocket on the
Yeah,
yeah.
yeah, that's very counter trend. So those are unreliable. I mean,
But it's because there was stellar momentum
And a
there was-
boost, yeah, and a
there was
rever- yeah.
And there was a good chunk.
if that was
candle.
if that was with trend, you're in the money. Like, just don't even ask questions. Press the button, because that's going to fly. So what I've done, I realized that R I've made one size bigger, so it sits above clearly. That's the thing with programming. The size you make the icons determines where they plot. That's why I did make the rocket and the boost a bit bigger, because it posted further away from the sell or buy signal. But now I've made them smaller due to public demand. They do plot a bit over, but you can see like there, I mean, that you're not going to miss that. There's a booster with a strong buy signal and price. I mean, there was a slight pullback.
Can you just measure the rocket and the R for the sake, for the amount of pips?
That one there.
Yeah, from top to bottom.
So, I mean, that would have opened quite high up. So let's say it opened there. If you stayed in,
No, well, even just from to the bottom of its wick. Sorry, the magnet's messing me up. Okay, 18.
it would have been 18 pips there.
I
But look,
it
I,
was almost that within the first two candles.
yeah.
That's why there's that.
But there's two good reasons I would never have taken that trade. One, it's very counter trend. Number two, you're trading into a pivot. So can you see although they're very dim here. I hope you can see it.
Can see it.
Not just easy. So I mean, counter trend, although it's got a lot of bells and whistles, these things go well with trend. I love it when you're in the trade and you start seeing this thing going bright and all the candles are bright.
Separation, that right there is frame that, burn that into your subconscious.
Yeah, when you see that pattern. I mean, it also programmed this thing to change color, but it was too many colors, so I took it off. The 55 is what you need. And here too, you buy and then you start going bright. Right, well, I've spoken for a long time. Any other questions? Hopefully, I mean, look, I want to make trading fun, so hopefully all these little bits and pieces make it fun and interesting and give opportunities to enter.
We'll figure out what suits you most. It's like there's been seasons where I aggressively try to see how much I could turn off to make it less noisy. So it's like, I've had diamonds, I've had no diamonds, I've had and you will figure out what your own thing, depending on how much you mind on your chart. Initially, it might be a lot to take in if you're looking at it all at once, but we've essentially been layering these and
I mean, Asta, if you think this is busy, you should have seen, you should have seen my other ones. Because I've made a whole lot of stuff. I had something on every candle, something was saying something to you.
But yeah, give yourself the freedom to almost start with nothing and turn on something and go back and look at some data and go, okay, I'm now seeing where those are showing up a lot, and then add something else, and you'll start to just sort of assimilate more of it all within itself, if that makes sense, without trying to see everything all at once. Get familiar with individual pieces and figure out what suits you best.
So any other questions?
You said you'll post those rules, the 10 points.
Yeah. Well, I've got a Word document here, so how can I copy that? Paste. Send, there we go. There we go.
Use it on Bitcoin and which time frame is the most accurate?
It's much of the same. Like the more you zoom out, the stronger things get.
Yeah, it works well and everything. I mean, my other son trades gold
I
and
haven't traded
Bitcoin.
yet. Mikey trades.
He uses this in here as well on Bitcoin and gold.
It's going to be an interesting week.
Yeah.
We're going to get a lot of clarity.
I mean, it has been
Yeah.
So I've been doing this a few years. I've found the last 6 months have been the hardest trading. It's been a lot of rangy. It wasn't that long. The market was far more easy. I was trading the Dow and the Nas. I mean, I would send out my pictures. I'd be trading the Dow and the Nas at the same time. Buy, boom, getting 30, 40 pips on each. And, and that's been fun. They've been moving in opposite directions. The market's kind of trying to find a new rhythm. I think when Trump comes in, I think it's going to settle down and we'll see. But it has. I've noticed there've been
season of question marks.
Yeah.
Once he's in and policy.
It's Tuesday, right? Tuesday's the big day.
Yeah, when there's uncertainty, the market is more rangy. So it has been trickier. That's why. I mean, that's why I said I'm so nervous about starting now because this is the worst time to trade. It's been the hardest. But I think we're going to start seeing easier waves to track and follow.
The morning was still cool, because we got to talk about structure.
Yeah.
And what priced it on. Like that really showed off the strength of being able to see higher time frames.
Yeah.
On a chart. Like the 4 hour.
I mean, I'm really looking for, obviously, when you like take in the live session, you don't want to press buy and make a big loss. So I'm a bit conservative when I'm teaching, but there will be some moves. It'll be great to like get some signals while we're doing are you enjoying those are the live sessions in the morning?
Yes.
So we'll do that every Thursday. So we'll just, all right. So Ty, is that back to you?
Yeah, well, it's not much for me, but
Thank you. Let's unshare. Come on. Stop share. All right, we're done. Hope you enjoyed that. See you in the chat.